In a world where the lines between legality and ethics are often blurred, a recent statement from a Trump official has set off a firestorm of debate among legal experts. The call to buy Tesla stock has raised critical questions about the implications of such endorsements from those in power. Stay tuned as we dive into the details of this unfolding story and explore how this could impact the future of political influence in financial markets. But before we begin, make sure to hit that like button and subscribe if you want to stay updated on this fascinating case. This unexpected development has captured the attention of legal analysts and the public alike. The remarks made by a Trump administration official urging people to buy Tesla stock are now under intense scrutiny. Legal experts are questioning the boundaries of what government officials are allowed to say when it comes to the stock market. So, what does this mean for public officials and the rules they must follow? Let's take a closer look. The official, whose identity is still under wraps, shocked many when they openly said, "Buy Tesla stock," at a public event. Legal scholars were quick to react, with some suggesting that these comments might actually violate federal securities laws. Government officials, after all, are bound by strict regulations that prevent them from making public endorsements of specific stocks, especially when it could affect market behavior. The Securities and Exchange Commission, SEC, has long been clear that any statement from an official that might influence stock prices needs to be carefully scrutinized to avoid market manipulation. Even though the official's comment might not have been intended as an order, the potential market impact is significant, especially considering Tesla's massive influence in both the automotive and tech industries, despite the breach of protocol. Many analysts are doubtful that any real action will be taken. The political climate surrounding the Trump administration has often shown a certain leniency towards its officials, leading some to question whether the SEC will even pursue the matter further. The financial world is watching closely, as the outcome could set an important precedent for how similar cases are handled in the future. Investors and market analysts are particularly concerned about what this situation could mean for the future of accountability among public officials. Some worry that if no serious consequences come from this, it could lead to a more chaotic and unpredictable market. However, others believe that the media attention and public outcry may force the SEC to take a more active role in regulating such behavior. As we wrap up, the legal fallout from this incident is still unclear. But one thing is certain, the line between free speech and regulatory compliance is becoming more difficult to navigate for public officials. What happens next could have major implications on how government figures interact with the stock market moving forward. This situation highlights the ongoing complexities of regulatory oversight in the financial sector, especially when it involves public officials. As this case continues to unfold, it's critical to keep an eye on how these discussions evolve and whether they will result in changes to policy or enforcement practices. Don't forget to leave a comment below and let us know what you think. Should public officials be allowed to make such statements? And what do you think the SEC should do in this case? Stay tuned for more updates.